through training, how to choose a certifying body, basics of the audit process, and creative ways to fund your ISO transition, including federal and state incentives. On the panel today, we have James Cunningham, who's a partner at CNA. James earned his bachelor's degree in accounting from Fairfield University and is enrolled at Harvard University, pursuing his ALM Masters in management. James' professional career began in corporate training and financial consulting, where he is primarily responsible for organizational development, change management, process improvement, ISO implementation and management, and ERP implementation. James has practical experience through working hands-on in the industry as a general manager of manufacturing facilities for 2 years, and has an extensive experience in management in a manufacturing environment, process improvement, and employment development. Tim Whitcomb is also here with us. He has worked in quality management systems field for over 20 hours, honing his expertise in ISO 9001, ISO 14001, ISO 27001, and ISO 22301, and related disciplines through that period. As certified management systems lead auditor, he has led and participated in third-party audits for organizations in the ICT, transportation, distribution, finance, electronics, manufacturing, and service industries around the world. And Tim serves on various industry groups charged with developing and overseeing international management systems and oversight of third-party certification to such standards. In his present role as Business Unit Director at NQA, a leading global certification body, he oversees NQA's USA's ISO 9001 program, which has nearly 4,000 certifications in the Americas. And finally, we have Ryan Foley, who is a partner at CNA. Ryan has helped clients through every phase of the business life cycle as a small business consultant, tax strategist, trainer for well over a decade. Ryan believes that all challenges can be broken into manageable parts and best addressed in an organized, practical manner. He is able to maintain a unique bond with his clients through his experience sitting on both sides of the table. He has actively participated as CEO, CFO, sales manager, operations manager, controller, and various other business capacities for his clients. He understands the balance between planning, implementation, and the occasional but often necessary change in direction. Ryan excels in tax strategy and planning operational systems and controls, organizational improvement initiatives, and change management. Following this presentation, we will send out an email to all attendees with a link to the slides and contact information for the session subject matter experts. You can address any questions directly to them. Without further ado, I'm going to turn this over to James Cunningham.
All right. Thank you, John. And good afternoon, everybody. Thrilled to be here. You get the flick? Can you jump to this? Thrilled to be here. A little bit about CNA Cunningham and Associates. We are a training and consulting firm, mostly a training firm focusing in quality training, management training, sales training, and operational training, and some consulting to back that up. And we love working with NQA. We're thrilled to be here in our first of a three-part webinar series. And the reason we love NQA, we love working with them, isn't because John and Tim are great guys. They are, but it's because our clients love working with NQA. We always get great feedback from the auditing process and how painless and wonderful it is going through with them. So it's a very nice setup. Again, today's the first part of a three-part webinar series. What we're hoping to cover today is primarily jumping into best practices of leveraging our ISO 9001 2015 quality management system as a business management system. We'll also go through demystifying the audit process and then how to fund improvements both for future ISO initiatives as well as previous or past ISO initiatives. So jumping right into it, there's a lot that I have packed into this first portion of best practices, so I might be moving at a breakneck clip, but again, we'll send this out afterwards, is what is ISO 9001 as a best practice? If there's one thing that we leave with today, it's that ISO 9001, any quality management system, does not live in a vacuum. Quality is not a silo. Quality doesn't live in the inspection room or with the quality manager. A QMS, a quality management system, when done properly, best practices, is actually a business management system that supports the organizational goals from a top level to frontline employees. So we had a wonderful turnout for, again, this first webinar. We had a chance to look through different roles and positions for who's attending today. We have companies attending from across the U.S., up and down the East Coast. For our CEOs, presidents, and management team, I hope that, well, it's our hope that you leave here today with a new appreciation of how to leverage ISO 9001 to hit your profitability goals or to improve your efficiencies or to roll out robust management systems. And for the quality managers, we know there's a lot of quality managers on the line today. Hopefully you have some new ammunition in your back pocket when you're hitting that wall of how to make your improvements or continuous improvements. You have some new leverage on how to get management commitment. So that being said, I'd like to share 3 client stories with everyone today about best practices, or I hope to illustrate best practices for our ISO 9001 2015 QMS. The first, we have a client we've been working with for about 5 years now, a custom cover manufacturer for commercial and military uses out of Western New England. And we hooked up with them for a classic case of ISO for the wrong reasons. They were interested in getting ISO primarily because a customer was requiring it. They needed the piece of paper on the wall. And when we first sat down, we didn't have the meeting of the minds, and it was mostly, again, how do we just blast through this? What's the quickest route from A to B to get our ISO 9001 registration? And as we went through, there's two owners there, and started trying to define our quality goals for the first time. We had a real hard time. Owners were coming up with quality goals like controlling calipers or tooling, or even a step up from that, looking at meaningful KPIs. But through the process of asking our 5 whys, why do we want to control scrap and rework? Why do we want a good scheduling system? Why is it important that we don't have a high RMA rate? We really got down to the organization's overall goal, which was to increase profitability. And they said, you know what, we do. This ties into our business plan. We're trying to increase profitability 5 to 10% this year. And we found out that controlling scrap and rework supported that, along with all of the other KPIs. It's funny, for our first audit with NQA, our first finding was that our goal wasn't specific enough, 5 to 10%. We ended up having to hone that into 7%, right? A specific goal. But the idea is that our quality goals, ISO best practices, ISO 9001 best practices, should align with our organizational goals and our overall performance goals. When we did that, we were able to roll out a robust management system from the executives, the owners, to supervisors and managers and frontline employees. Their number 1 customer is a defense contractor, a tier 1 defense contractor, who initially had required the registration, but when they realized, and when the buyer came down and saw that they were taking it seriously, along with their quality vendor supervisor, they looked at their capacity planning, and their customer found out that they had about 40% extra capacity that they could start loading them up with. And they've been growing now. This success story is our client's been growing at a 20% clip for the last 4 years. They opened up a second location by using their ISO 9001 risk analysis program. We did beat our 7% profit goal and got 10% profit margin increase over that first 12 months. So we rolled out a robust supervisory scheduling system and supported that profit increase, the margin increase, by beating our bid versus actual KPIs. Again, quality didn't live in the quality room. Quality was aligned with the business goals. A second quick story or case study for best practices. We work closely with a glass manufacturer in central New England. An owners and management team, brilliant people, great ideas on how to satisfy their customer needs, roll out new types of glass and product lines, great ideas for how to improve their efficiencies and processes. And I say this lovingly, but terrible implementers. So we hooked up with them. They had these great ideas. They had all these new systems they wanted to roll out, but they would send out some, I don't know how many quality managers or general managers on the line right now might be chuckling about getting a Sunday night email from an executive or an owner with new ideas. And you know those systems, they either don't get implemented or they last for a week and fall flat. So when we hooked up, we're trying to find a creative way to implement all of these wonderful improvements into our client's business. And we had a meeting of the minds again where ISO 9001 as a business management system could accomplish all of these goals. We ended up designing easy-to-control executive and supervisory management dashboards. We redesigned the shop floor layout to significantly increase efficiencies through streamlined workflows. We rolled out a new inventory handling system, decreasing glass handling errors, breaking glass roughly 20%. And we reduced RMAs from 3% to 0.3% over 18 months, which again, some of these might be semi-obvious when you think about ISO, RMAs, and different acronyms that apply to a traditional ISO system. But having executive and supervisory management dashboards and good management systems and controls are often missed when thinking about ISO as a management system. Best practices, we often are able to leverage the implementation effort to improve the organization as a whole. So for the quality managers out there, again, and I know for those who are struggling getting management buy-in right now, here are some examples that you can go and use. And in terms of trying to roll out your improvement initiatives, all right, it's a team sport. And that's the whole idea behind best practices of ISO 9001 2015. The third and final case study, or case story that I'd like to share is more of a what not to do, right? Best practices by omission. We have a client that we're no longer engaged with that hooked up about 2 years ago, a casting house, again out of Western New England, who was grandfathered in with one of their, with a tier 1 defense contractor, and whose on-time delivery and scrap rate was so poor that their customer removed the grandfather clause and actually required them to become ISO. We sat down, and again, that first sort of conversation of, well, how can we get our piece of paper, our registration hanging on the wall, didn't go so well, which we best practices would say that we use this to increase profits, to increase management systems, to leverage it to reach your organization's goals. When we reached our management review, our first goal-setting meeting, it wasn't like pulling teeth. Rather, management just blew us off. They didn't come, and the writing was on the wall. We ended up disengaging. That company is actually no longer in business. They had other priorities, but this just goes to show that the best practice to highlight today is management commitment. And again, for the quality managers on the line, you can play this for your management team. And for owners and CEOs and presidents and other managers' teams, there is so much we can leverage with an effective ISO implementation. Some of these benefits, I've sprinkled through them in the story, but on the screen, we do have that. We can improve management systems and controls. We can decrease inefficiencies and increase profit margins, absolutely. Increased sales opportunities is an interesting one. Oftentimes we'll hear that companies want to become ISO 9001 to increase sales. And it's not necessarily the case. So having an ISO registration best practice, it's not a sufficient condition that if we're ISO 9001, sales will increase. However, it is a necessary condition that it certainly opens doors. And having that ISO 9001, we can start talking to higher level A or B level customers and chase their business. We can certainly empower employees to make better real-time decisions, and again, that's something that we've experienced time and time again through our implementations, is it's a full organizational rollout and full organizational buy-in, and of course, it prepares us for growth. With that being said, and I think I'm how am I doing on time? All right, so fantastic. So, what are best practices to implement either a new ISO 9001 system or the various improvements that our current continuous improvement system is calling for? We believe it to be training. Our experience has been best practices implementation through training. There's an analogy that we sometimes use about getting fit or getting in shape. You know, if you're out of shape and you try to run a marathon, just out of the blue. One, it's likely you won't finish, and two, if you do, you will not be in shape. Running 26 miles, it's 0.2 miles, just isn't going to get you there. However, if you run for an hour a day, every day, for 2 to 8 months, now you can't see I'm winking, but for 2 to 8 months, I don't know when in that process you will become fit or in shape, but you will. ISO implementations we often see fail or fall flat when a quality manager tries to do it by themselves and do it over the course of a week, or consultants or trainers come in and try and shove it down the organization's throat. It has to be collaborative. It has to be organization-wide. And training is a wonderful way to implement change. It's a fantastic medium to go shoulder to shoulder to implement on-the-job, client-specific items for improvement. And again, it's that idea of evolutionary change, not revolutionary change. We found that through training, the improvements that we're able to implement through best practices are sustained. And it's not that 6 months later we found that we have these great ideas, but we're no longer using them, or we have these processes. And I'm sure Tim's going to echo this. Sometimes auditors come in and say, "You have this great process on paper. Why aren't you using it?" And oftentimes it's the implementation strategy. So best practices strongly encourage using training, both internal robust training. There are also Ryan will lean into this. Often through training, there's your local state likely has funding agencies, grants, and other mechanisms to help with training. So it's a multifaceted benefit to implementing through training. With that being said, here are some different training objectives. I'd encourage you, when we send out the slides, you can read through these, but these are just echoing the stories I've shared. And again, 2 of the 3 case studies that we've gone through. To close on ISO best practices, again, if you leave with nothing else today, ISO as a QMS, or quality management system, when done properly, when using best practices, is an effective, robust business management system with management commitment, and we can increase profits, increase efficiencies, and roll out and be a lever for just about any organizational implementation or improvement you're looking to make. And with that, I'm going to turn this over to Tim, who's going to demystify the auditing process for you.
All right, thank you, James. And yeah, I certainly echo a lot of what James indicated there as far as the business management system. And I guess this webinar presupposes that folks have some familiarity with the standards. So I'm not going to go through the standards so much as some of the activities around the certification process. So namely for those folks that may have already looked at the standard and are now taking that next step, ready to jump in. As mentioned in the outset, NQA is a certification body, otherwise known as the auditing firm or the auditor or a registrar. So when you're looking to get certified, in a nutshell, what you need to do is select an auditor, to keep it simple, or a certification body. They are the ones that come in and do the audit as a third party. And then based on that audit, they are the ones that also grant you, the organization, that certification. So in a very simple process, that's what you're wanting to do. So the first step is finding that certification body. Now, I'm going to guess that most people would start by going to the web to do a search, and it is fairly simple to find certification bodies out there. However, there are a lot of considerations in choosing the right one for you. So first off, in the little block to the right there, one of the things that you might start with is an organization called ANAB, their website being anab.org. ANAB is the US-based accreditation body that certification bodies are subsequently audited by. So ideally, you want to be working with an accredited certification body because we have certain rules that we need to abide by, and those processes are likewise audited. So ANAB is a good clearinghouse for US-based accreditation bodies or auditors. Likewise, you might talk to colleagues or work with consultants or trainers that know certification bodies. But ultimately, what you're looking for is a good fit with your organization. Certainly recommend that you work with an accredited certification body because they'll have good reputations. You obviously want someone that's going to be responsive. They should be a partner in this with you. So they need to have certain competencies, certain availabilities, and that may also boil down to where either the firm is located or probably more importantly, where their auditors are located. And then you also want to talk about their availability or their time frames in terms of getting the auditor on site for you, time frames of processing the audit work afterwards and ultimately getting you the certificate. And then finally, last but certainly not least, there is the cost factor in, and auditors, certification bodies are going to have different pricing structures. Be aware of that as you look through it, but also be mindful of, it is a service, and in a lot of cases you get what you pay for. So think about the type of relationship, the partner you want, before you just go with the lowball cost. In terms of the audits themselves, ISO audits, whether it's ISO 9000 or any other ISO management system for that matter, the ideal scenario is that the auditor is coming in and they're looking for you to demonstrate that you are in conformance with the standard, that you've developed the certain processes or procedures that James talked about, and that you're implementing those, and that you can, at the end of the day, during the audit, show objective evidence of that. Objective evidence is a term that auditors will use, and it can mean a couple of different things. It could just very simply be the procedure or a process that you have in place to meet a given requirement. Many times that then follows through to the actual evidence or records of that process being followed. Sometimes if there's not a lot of records or documented information around that, the auditors will look for interviews with different individuals throughout the organization to substantiate that a process is in place. And then sometimes if that process is a very tactile process, or if you've got a production type environment, those processes will actually be observed during the audit. Harkening back to what James said, it certainly includes various levels of the organization, starting with top management, but it does go all the way down to the line level employees. So it is all encompassing. It is certainly that business level orientation. ISO audits should be interactive. It's not the auditor coming in and dictating what they want to see or what they need to see. The best audits occur when organizations are set up to explain the processes they've implemented and how they've implemented and how they've met the requirements of the ISO standards. So certainly make sure that your audits are interactive. They should also be transparent. The auditor should be very clear about what they're seeing, what requirement they're looking for you to meet, what the purpose of their question is. There should be daily debriefs at the end of the audit to give you kind of a roadmap of where you're at on a daily basis. And then certainly the findings that you come out of an audit with should be clear, should be concise, should again tie back to a given requirement. All of that comes from the samples that the auditor takes. So this is not going to be a 100% inspection of every employee, of every activity you've got going through your process. An ISO audit is a sample-based activity, and again, that the main objective is to confirm that the processes are in place. So the auditor may take a couple samples, and if he or she has a good feeling that yes, that the process is solid, then they move on to the next process. Where the process seems a little bit shaky or the samples aren't confirming that it may be in place, that's where the auditors tend to dig a little bit deeper and or start to verbalize some findings. Audits are not surprise activities. They are scheduled, they're planned. You should have a very detailed audit plan in advance so you know when the auditor is going to be there, and really have it kind of scheduled out as to what processes they're going to audit in what portion of the day. And then finally, kind of back to the first bullet, do make sure that you've got active participation. It should be a two-way street. Generally speaking, in the ISO world, talking about initial certifications here primarily, it is a two-stage process culminating with your certification. So you'll hear auditors talk about stage 1 or stage 2, or perhaps phase 1, phase 2. I want to briefly talk about what those are. They are both required stages per the rules that accredited certification bodies work to. Stage 1 is simply an assessment to understand how the organization has set up their QMS or their business management system, make sure that they've met all the requirements, at least on paper, of the given ISO standard, and really come up with the determination of whether they're ready to move forward to the implementation audit or not. The duration of a stage 1, typically a day, some cases 2 days, and it is largely focused on a lot of discussion and a lot of documentation. Stage 1 audit takes place primarily in a conference room type setting with maybe some brief walk around through the facility, but it will not get very deep in terms of talking to the people on the floor, so to speak. That said, Certainly, it can involve more people throughout the organization to kind of hear what's being discussed and add value to that, but it tends to be kind of focused on the core team or the implementers. The second stage is where the rubber really starts to hit the road. The objective of that is for the organization to demonstrate their conformance to all the requirements in effect. Therefore, you can expect that audit to take a longer duration, usually several days, and that really is a function of how large the organization is itself. So the larger the organization, the longer the audit, in essence. And that's where a lot of that objective evidence starts becoming really key for the organization to have available and to demonstrate. So make sure that you've got records, make sure that you've got activities going on to show the auditors that objective evidence. Coming out of stage 2, the auditor will give the recommendation. There may or may not be corrective actions that need to be handled by the organization, but assuming that all goes well from there, the certification body, the audit firm, will then grant a certification. Certification is typically an actual piece of paper or an actual electronic document. In most cases, that's going to be valid for 3 years, but it is incumbent on the organization maintaining that program, and that's monitored by the certification body through annual or typically annual surveillance audits. There is an option that most certification bodies give as a gap assessment as well. So in addition to doing the ready or not and then the actual implementation, a certification body can do a gap assessment, which is a little bit off the record, digs a little bit deeper, but it does not necessarily have a material effect on the stage 2 audit, but it gives the organization some guidance of where they might have some gaps that they would need to fill prior to the stage 2. I would say in all cases, the gap assessment should occur prior to the stage 2 because that's the benefit of it. I would say optimally, it occurs between the stage 1 and stage 2, and in many cases can be run concurrently with the stage 1. But you could also have a gap assessment prior to stage 1. It really just depends where you are on the implementation curve. Talked a little bit about what's covered in the stage 1, kind of being the ready or not. So the auditor will look for some understanding of the company, the scope that you're looking to get certification for, and then really just the understanding, the preparedness of some of the key individuals, where the processes and procedures are in terms of the development life cycle. Hopefully they're mostly, if not all, developmented by that point. Likewise, the status of them being implemented, and then status of some key processes like your own internal audits and your own management review. Those would be the key hallmarks of a stage 1. The outcome will be that closing meeting, that transparency, where the auditor will indicate whether they assess you as being ready or not. You will get an actual documented audit report from that, and part and parcel of that audit report should be a list of concerns. Stage 1 technically has concerns, not nonconformances, but you can kind of interpret those concerns as potential or likely nonconformances in the stage 2. So obviously that's your starting point of taking action between the stage 1 and stage 2. Ultimately, again, the auditor will give kind of that go, no-go decision and also discuss what your planned interval is between the stage 1 and stage 2, ensuring that you've got enough time to address any of those concerns. In terms of tips for a successful stage 1, you do want to have the QMS mostly ready to go. If you're doing a gap assessment, I would encourage you to combine that. Do plan to spend time with the auditor because, number one, you'll get a lot of insight from the auditor, but conversely, the auditor should get a lot of insight from you or your team about how you've implemented and how you've interpreted. So do listen to what's being asked and certainly address those concerns that come out of the stage 1. What's covered in stage 2? Well, basically everything else but the kitchen sink from the standard perspective. So the auditor will review the progress since stage 1. They will look at the processes in totality at this point. So in some cases, they may have touched on some of these in stage 1, but there certainly will be the expectation that all the processes are audited, i.e. observed in practice during the stage 2. That is usually where the sampling of employees comes into play. So again, not every individual will necessarily get quote-unquote audited, but we will ensure that each process is audited by virtue of sampling various lines or various processes going on. And then again, there should be a lot of dialogue. The stage 2, likewise, should be a two-way street. So make sure that you're kind of explaining how you've met the requirements and how you've met your processes, and have that a two-way street with the auditor. The outcomes from stage 2 should again be, assuming that the stage 2 is multiple days, you should expect to have a daily debriefing from the auditor as to what's been accomplished, what's left to do as far as the audit goes, along with the status of any findings that may be potential or seen at that point. And then wrapping up the audit on whatever the final day would be, I would expect a more formal closing meeting with that final assessment, along with a read-through of any of the actual nonconformances and guidance how to address and treat those nonconformances, leading up to what the expectation for the certification timeline would be. In terms of dealing with that, and that's what we would call corrective action, dealing with any of the nonconformances, some tips for that is, most cases now, auditors are looking for three main things. So, backing up just a bit, we talk about nonconformances. That is what the auditor would see as a deviation, if you will, from your own processes or procedures or the standard requirements. So the corrective action is kind of the general statement of what you will do to correct that. And it really has three key parts, as I said, that the auditor is going to be looking for. The first is correction. And don't mistake correction with corrective action. Correction is very simply kind of the immediate fix or containment, in some cases, to address what was found. So if a given process was not followed in a given instance, that instance needs to be corrected. The next step would be to look at the root cause, which is where James alluded to kind of a 5 why process. Why did that instance of that process not occur? And you might go through a 5 why type analysis to determine what the actual root cause is. You want to get to something that is the cause and not just a restatement of the nonconformance. Unfortunately, too many times we see the root cause coming back as more or less a reiteration of the finding. So if that's what your root cause looks like, you probably need to go a little bit deeper. And then finally, coming from that root cause, that's in essence what you want to look at correcting or addressing. So address the root cause with a corrective action that will, in essence, prevent that instance from recurring. And then finally, you're kind of the part 3A or part 4, if you will, you'll want to verify that your corrective action has been effective, because ultimately that's again what the auditor will look for when they come back to the next audit, is to go through your corrective action process and really verify and show or demonstrate that objective evidence that the corrective action was indeed effective. So I think finally, just kind of wrapping all that up in terms of the certification process, this is in essence what it looks like in a timeline. So from start to finish, you can expect it to be at least several months, and again, that kind of is on the curve of how ready you are to start with, how many resources you've got, what the top management commitment is, so on and so forth. But this is a rough timeline of the certification. So with that, hopefully I've addressed some questions that folks might have that haven't gotten into the certification process, and I will turn it over to Ryan to talk about how you can get started and maintain some funding for this.
All right. Thank you, Tim. Thank you, James. Thank you, John. So funding. I'm going to be talking a little bit today about some creative ways that we can generate cash through the ISO implementation process to not only fund the initiative, but also, in many cases, actually create a net cash positive transaction. So if I'm going to just quickly summarize, Tim did a great job in terms of outlining what we need to do to become ISO certified. James touched on the how of the ISO certification, which really centers around organizational commitment, training, and having good partners to help with that success. And in terms of the funding, there's a number of different options. First, looking at some federal incentives that are available. ISO by itself has a great return on investment for the organization, and that was demonstrated through James's case studies. But in addition, there's some additional federal and state incentives that are available. Specifically, there's some new revisions to the tax code under the research and development tax credit section, which highlight that when an organization is going through any type of significant process improvement initiative, those expenses could qualify for additional tax credits, which is a great way to go ahead and generate some capital to fund these types of initiatives. Because as we know, there's different expenses, whether it be hiring a trainer or a consultant, or it'll be paying for the registrar to come in and certify. And also, one of the biggest expenses is the time associated with implementing ISO, which is organization-wide. Looking at some of the top-level qualifying expenses we look at under the research and development tax credits, research is a fairly broad term, and I'm going to actually delve into some qualifying activities outside of just the process improvement component. But most often people hear research and development, and they think of a person in a lab coat conducting an experiment. And there's a major misconception in the market that that's what it takes to qualify for these incentives, when it just isn't the case. Most industry companies qualify and do have qualifying expenses and activities that would have a direct impact on their tax situation. And the key expenses that we hone in on, as you can see listed here, are labor, direct performance of research or research activities, supervision, support, also any type of supply, prototyping, external labor, which would be also known as subcontractors. Those are all expenses that potentially could qualify. That would also include, if you're going through a process improvement effort like ISO, if you're using consultants to come in or trainers to come in, that is a qualifying expense most often. And as I touched on a little bit earlier, there is a natural link that exists between the IRS definition of a process improvement and the implementation of continuous improvement activities like ISO. So not only the initial implementation of the certification initiatives, but also the ongoing improvements that are typically associated with ISO, an ISO compliant or certified company. Tim talked a little bit about corrective action. That process within itself is a process improvement initiative and likely would qualify for some of these additional tax incentives. What we're going to do is, after this presentation, we're going to send out a link to the presentation, as well as a link to a recent newsletter article that we wrote with NQA, which highlights some of those incentives as well. So we'll dive deeper into that so you can do some additional reading. Here's a nice preliminary list just to get the mind moving in the direction of some of the activities that qualify under the new Research and Development Tax Code. Top of the list is process improvement, computer-aided design tools, 3D modeling, SolidWorks, things of that nature. Those are good leading indicators that there's qualifying expenses. Process improvement, or looking at improved products or designs, whether it be customizing an existing product, or if you're a build-to-spec organization where a customer is sending you prints and you need to design to manufacture and you're doing programming. If you're looking at new materials or improving performance, specific tooling that may be required for a job, whether it be a fixture or something more permanent like a custom machine or line, designing and evaluating process alternatives, sitting down and saying, okay, we've done this one way, is there a way that we can make this in higher volume or scaling up? Designing, constructing, testing those products. Again, that's typically we use first article inspection as a good leading indicator that there's probably qualifying activities under R&D tax credits. Streamlining manufacturing process through automation, safety enhancements, new applications, looking at ways to improve overall quality, production standards, and again, optimizing manufacturing process, yields, lead times, things of that nature. So there's a couple things that we just wanted to highlight. One, I led with saying that oftentimes if you're not taking advantage of some of these R&D tax credits and you're considering ISO is a good leading indicator that you probably qualify. Our clients, we actually just ran our 2018 numbers. Our clients that went through this process received an average benefit of $172,535 in 2018 through these incentives. That far outweighs most ISO implementation costs. So, you know, at the end of the day, there is an opportunity to create a positive tax benefit here. And the awareness that we're trying to bring to this is only 5% of eligible companies are taking advantage of R&D. The other thing too to highlight is for organizations that are maybe in a startup phase or just in their infancy, whether it be under 5 years, under 5 million, there's some new startup rules that apply so that if you are in a situation where you're revenue positive paying taxes, you can actually use these dollars to offset your payroll taxes. So again, just creatively finding ways to increase cash flow. This is a really nice opportunity for industry companies. And it's also, I know that we have a lot of consultants and trainers on the line. If you're running into a client that has budgetary issues, this is a good option to take a look at to see if you can go ahead and get over some of those hurdles. We have a couple success stories here. We have a good-sized manufacturer, $2 million in annual revenue, 15 employees. They received a $79,000 tax benefit through a 3-year look back that we looked at. Additionally, they received $30,000 in state funding, which I'm going to touch on in the next couple slides, which yielded a 10-to-1 return on investment with ISO. And that's without taking into account any of the efficiencies or operational components that came from just a better business model. We have a larger manufacturer, $65 million annual revenue, 35 employees. They received well over $200,000 benefits and $60,000 in state funding. Again, a solid rate of return at 15-to-1. I know that we have a mosaic of states that are on the line today, and I just wanted to highlight that many states have workforce training programs that will actually fund a portion of your ISO implementation costs. So it's worth taking a look and seeing what your state has to offer, and certainly as a resource if you need to go ahead and do a little bit more due diligence on that. It's also a lot of trainers are in tune with those different state incentives because they're local. So, talk to your local trainer, and if you're looking for a trainer, NQA is a great resource. You can hop online. They have a find a consultant tool. You can find a trainer close to you. Cunningham and Associates, certainly if you're in New England, we can give you some guidance on some state workforce training programs that will be available to you. And again, based locally, that can be somewhere anywhere from 10% up to 100% total funding for these types of initiatives, which again, just makes it more appealing overall. The other, and I'm going to dive into the great creative ways to go ahead and reduce or generate cash flows through some of these initiatives. What we found is that 25% of companies that are going through an ISO implementation are also investing in their physical property, whether it be equipment or they're building out their facility or they're buying a building or what have you. But if you are looking at expanding your facility, buying a new building or equipment, there are some additional federal incentives available, specifically by utilizing some of these tax strategies. You can write off or depreciate 30 to 75% of buildings and up to 100% of certain capital expenditures, which again, directly associated with ISO when you're doing it anyway. This is just another creative way to keep dollars in the company so that again you can start paying or creating a cash positive situation out of the ISO implementation. Some of the items that we look at often are new construction, purchase, roof, HVAC, windows, flooring, security alarms, electrical. All these things are just inherent in industry when again you're scaling up. So, just a very short, easy way to go ahead and make sure that you're maximizing qualified deductions. One, you can talk to your accountant or your local consultant that's working, or trainer that's working with you on ISO implementation. They're probably familiar top level with some of the things that are happening, some of these different incentives. You can also feel free to reach out to us. We're going to send out our contact information afterwards, and we can go ahead and give you some ideas on some of the things that you may qualify for. The other thing too is a lot of times we're able to steer you in the right direction and work with your accountant, and oftentimes it's not anything where it's a project with us or anything of that nature. We're just giving you good advice as subject matter experts. We have a firm belief that helping industry grow, helping companies that are trying to get ISO certified and grow their organization is very satisfying for us. And again, NQA does a great job at supporting its client base as well. gonna fly back here and I'll hand it back to John.
Wow, some great information today, guys. Appreciate the collaboration of Cunningham and Associates and NQA. It was a great webinar. Stay tuned, ladies and gentlemen, for the next webinar. We're going to dive into the ins and outs of data security and ISO 27001, one of the hottest ISO standards in the market right now. We see it on the news daily that there are breaches, and we've got to find ways to mitigate those problems when it comes to data security. Hardware, software have always been the solution, but we also have to look at the systems in place and what's going on internally as well. So stay tuned for the second series. We will be sending out invites shortly, and we'll make sure that everybody that is on this webinar today gets an invite to that as well. So I want to thank everybody again at Cunningham Associates and NQA. It's been a great call. Have a great day, great weekend, and we'll talk to you soon. Thank you very much.